PDAC 2022, ladies and gentlemen, and Commodity TV for you as the media partner of PDAC. We want to talk now today. It's Monday, the 13th June with Revival Gold, and Hugh, Agro, the CEO, is here with us. Hey, good morning to Toronto. How are you doing, Hugh?
Good morning. Good morning. Good to be with you.
Yeah, great to see you, and thanks for taking the time. You are, of course, participating also in PDAC, and as I could not come over through some personal reasons, at least we can do an interview. And of course, I want to use the time here and really congratulations to your resource update. Hey, well done, man.
Thank you, Jochen. Listen, you're missing sunshine today in Toronto, which is a very rare PDAC event. Of course, normally in March we hold this event, and today it's June and mid-June and a beautiful day.
Now let's put it that way. Let's put it that way. Normally in March we freezes our asses off.
As I say, a rare event in Toronto. But a very nice day and a fitting day to be talking about our resource update. 56% increase in our indicated resource, almost a 20% increase in our inferred resource. Total now 4 million ounces of gold in Idaho in the western United States, so a safe location. We're very pleased with these results.
Yeah, I really can imagine that. And I think it's not only the amount which increased. I think you had also some other, let's say, improvements with it, right? I mean, the amount is fine, but also I think with the grades and some other parts, they were quite positive, right?
Yes. The overall grade remains pretty much the same globally. But what we've done is we've brought up the cutoff grade on the underground component. And we've brought the overall grade of that resource up 39%. So we're starting to see that high-grade core of mineralization in the underground come together. Of course, we've got very few drill holes into it thus far. So as we put more drill holes into it, we expect to be able to improve the size and the grade even further still.
Super. And I read here already that upcoming PFS, so the pre-feasibility study, when do you expect that?
By year end. PA was in 2020. Wow. We've been doing the engineering study work, and we expect to have that by the end of this year.
Wow, that is really fast, I would say. And of course, you have the money in the bank to do so.
Yes, 9.1 million Canadian at the end of the quarter. And of course, we've just done a little arrangement to monetize the value of a non-core phosphate project that we hold. And so that will add to our liquidity to be able to continue to explore and invest in gold.
Super, that is perfect. Okay, so I mean, it's nice to have PFS, then that's all beautiful. But the thing is, you really want to bring that baby in production, right?
We do. We see that as a strategic advantage for Revival Gold over some of our peers. The fact that we have the infrastructure, the fact that we've got a relatively known, straightforward process to bring this operation back into production. PFS by the end of the year, permitting to follow. It's re-permitting of the site, and we think that should go smoothly. We'll have more on the timelines for that next year. But in essence, we're looking to produce somewhere between 65 and 75,000 ounces a year of gold for somewhere around 8 or 9 years, and to produce about $50 million a year of free cash flow on our last estimates at $1,750 gold. So that's that is a defining step for Revival.
Super. And in the PFS, I'm quite sure you're already figuring in the latest inflation numbers, right?
Yeah, we took those into account for the purpose of this resource update. And interestingly enough, our cutoff grade in the mill phase of the project didn't move all that much. Went from about 0.5 to 0.48. And our cutoff grade in the leach came up a little bit, mostly in the Arnett, which is a satellite deposit to the Beartrack. But again, all taken into consideration in the cost structure that we've just released as part of our resource update. And of course, will be reflected onward in our PFS.
Okay, super. Let's talk again a little bit about infrastructure, as we see here on that beautiful photo already. I think this is one of your big advantages, right? I mean, you are fully organized almost, right?
It is. It's a huge advantage. 40 to
Hmm.
$50 million a year of, sorry, 40 to $50 million of capex savings for the site. It also saves us in terms of permitting timelines. We do not have to build a camp. We don't have to bring power to site. And by the way, this is, for the most part, hydropower, which is carbon friendly and very important to investors today.
Okay, super. So next steps, of course. What can we expect aside of the PFS, of course?
Well, the PFS requires a lot of work around support in the engineering aspects, and that's what we're working on now. So geotechnical studies, optimization of the project. We are doing some more column test work with respect to the heap leach component of this resource. And of course, we're continuing to drill. We've got open targets in all directions. We just started drilling this weekend on the Joss target area. And we'll come to that. But we've also got open oxide target areas across the Arnett side of the project. So we want to get to those later this year as well.
Okay, and we see already here like a complete view on the Beartrack trend. And as you mentioned already with the Joss target, you guys restarted. So how many meters you want to drill there?
Well, we'll start with how big this is, 5.6 kilometers of strike. The circled area is the focus on Joss. It's an underground target. Of course, we ended last year our drilling with about 110 meters of 4.3 grams per ton gold, including a couple of intercepts that were relatively high grade here in the order of 12 grams over 14 meters and another 9 grams over 12 meters. So that's where we ended the program, and that's where we're going to start again this year. And we'll be starting in this pictured area you're shown. This is the block model in the Joss area. The magenta color is 5 grams and above gold. Remember, 100% gold. So as we put more drill holes into this, we expect to expand that magenta area into the pink area and beyond. Of course, it's open in all directions. There's about 18 drill holes into this area. All 18 of them have hit mineralization.
That's really a lot. Super. And you would put that also then in an updated resource estimate, or how do you want to use that?
Yes, we haven't quite decided how much more drilling we're going to put into this before we do a resource update, but certainly we'll start to get a picture of the extensions at depth and potentially on strike of this area. We've got numerous other places to drill as well, but this is pretty exciting, and we're in there now.
I really believe that, absolutely. No, I mean, you have an exciting company, that is really for sure. We saw recently a lot of M&A transactions already. I think some big companies have started, but to me, it looks a little bit like that now the smaller ones, or let's say the mid-size at least, go a bit more into the focus. What's your view on that?
Yeah, look, there's great value in the sector right now. The average price at which explorer developers are trading by RBC's data has reduced from about $80 an ounce to now $40 an ounce. The average takeout price in the last 5 years has been about $65 an ounce. Here we are, Revival Gold, trading at about $8 or $9 an ounce in the ground. And one of our peers in the Western U.S., Gold Standard Ventures, has just been acquired in a premium transaction. There are about 4 dozen smaller and intermediate-sized gold companies that are looking for growth projects for their pipeline. So we expect to see more M&A activity in the sector, more consolidation. It's just a very good time to invest and to continue to consolidate at these valuations.
Absolutely. What's your view on the last Friday? All of a sudden, we saw an intraday reversal in the gold price. For me, that was a sign of hope, I would call it, because all of a sudden, out of the blue, gold was minus 20, all of a sudden, plus 25. Today, it's again a bit under pressure, $15, $18. But to me, it looks like with all those inflation numbers now published, I mean, should be at 2,500, right?
The outlook is just couldn't be better. It's a fantastic setup. Look, the S&P 500 is down about 20% this year to date. The senior gold stocks are relatively stable. We're at 1850-ish gold, and that's a darn good price for these companies. They're making dividends in the order of 2 to 4%, free cash flow in the order of 5%. So they are in great shape, and they are outperforming the market. And that's what gold's supposed to do in times of trouble.
Absolutely. Yeah, I read yesterday a great interview with two US fund managers, and it was a young guy and an older guy, really interesting. So a nice mix. And they said the day will come when all those algo traders and those AI traders and those automatic programs will switch from Bitcoin into the precious metals.
Yeah, listen, we kind of stick with the fundamentals of doing good work, expanding the resource. Just look at the 5-year track record at Revival Gold. Price of gold is up about 50% since we got started. And meanwhile, we've gone from 0 to now 4 million ounces of gold. So look, we certainly believe the outlook for gold is good. And we think the outlook for this project is outstanding.
Absolutely. Great final sentence. Hugh, thank you very much and wish you all the best for PDAC. Hope you have a lot of meetings already and some good investor meetings on the floor.
Thank you, Jochen.
Super. Thank you very much. Yeah, ladies and gentlemen, that was Revival Gold, Hugh Agro, the CEO for PDAC 2022. Great company. You really should check it out. And as Hugh said, the gold price is 50% up, and Revival Gold went from 0 to 4 million ounces of gold, but the stock price really has not matched that so far. Also, the analysts see much, much higher stock prices for this company as we do so. And I'm a shareholder of the company. I also have to disclose that. And yeah, thank you very much for watching us. That was Commodity TV for PDAC 2022. Thanks and bye-bye from Switzerland.